If you've been saving for a down payment and you feel like you're doing everything right, when someone mentions closing cost and suddenly you're like, wait, what is that? This is the video for you. Because closing costs are one of the biggest surprise expenses in home buying because people plan for that down payment and they plan for the monthly payment. And then closing costs show up kind of like a pop quiz. By the way, you also need thousands of dollars more to close. And so if no one explains it clearly to you, you either freak out and assume that you can't buy or ignore it and get blindsided later. In this video, I'm going to break down closing costs in plain English, what closing costs actually are, what people forget to budget for, how to estimate them early, and how to prepare so closing day feels calm instead of crazy stressful. If you want to walk into homeownership without surprise and money moments, go ahead and stay with me. So let's start with the simplest definition. Closing costs are fees and upfront expenses required to finalize your mortgage and officially transfer the ownership of the home to you. They're basically the cost of doing the transaction, and they are separate from your down payment. Although, as crazy as it sounds, they're pretty much paid together, so it gets a little confusing. The down payment equals the portion of the home price you're paying up front towards that purchase. And the closing cost is the administrative, legal, lender, prepaid items needed to complete the deal. Now, here's why this feels so confusing. Closing costs are not simply one thing. They're a bunch of multiple charges that come from all kinds of different places. And so I want you to think about closing costs in 3 separate buckets. Bucket number 1 is the lender or the loan fees. Bucket number 2 is going to be third-party services. And then bucket number 3, not a true closing cost, but still considered one, prepaid items and reserves. And we are going to go through each one. So in bucket 1, the lender and the loan fees. These are the costs tied to creating and processing of your loan. Depending on your lender and the loan type, these can include loan origination fees, underwriting fees, processing fees, sometimes points, also called discount points, if you choose to buy down the interest rate. Now, an important note, not every lender charges these in the exact same way. Some wrap the cost into the interest rate, and some charge more upfront. And it's why comparing lenders matter and why you need to understand ahead of time how they handle that. But the big picture, this bucket, this cost of the lender doing the loan, that is what this bucket is. Now, the next bucket, bucket number 2, is going to be third-party services. This is the stuff required to make sure the property and the legal transfer are clean and actually verified. So this often includes things like the appraisal to confirm what the house's actual value is, the title search and title insurance to confirm ownership history and to protect against any kind of title issues, escrow or attorney's fees depending on the possible state that you're in, recording fees. These are fees for like filing paperwork with your county or parish depending on the state. Sometimes inspections, and note that inspections are often paid before the closing, just like appraisal, but they are technically still part of the overall closing process cost, but these typically will not show up on any kind of line item, like appraisal and the rest will.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4-693-733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
Now, this bucket is basically prove the home is worth it, prove the title is clean, and legally transfer it correctly, and all the fees associated with doing those things. Now, bucket 3 is going to be prepaid items and reserves. And before we get into that, I'm going to stop and say that these are not actual true costs. They are just considered closing costs because you have to have these items in order to be able to close. And so this bucket does surprise people because, again, as I explained, it doesn't really feel like a fee. Kind of just feels like money disappearing. But I promise it's not random. It's usually prepaying items related to the homeownership start date. Things like prepaid interest, depending on what day of the month you close. Homeowner's insurance premium, the upfront amount, aka you have to pay an entire year when you actually close on the loan. Property taxes. Some of these may be prepaid by that seller, but you do have to go ahead and be prepared to have those paid at some point. Escrow reserves. So this is going to be the cushion that your lender is going to require to for your escrow account, which is going to account for the taxes and the insurance. So what this bucket is basically is you're funding the beginning of the homeownership. You're setting up your escrow so that the lender is protected and that the tax and the insurance can be paid when they actually come due. Now, let's talk for a second about the question that everyone wants answered. So how much are closing costs really? And I'm going to say this really carefully because it really, really, truly depends. If you've been watching this channel at all, you know that it depends is one of the things I say a lot because closing costs vary by the location, the loan type, the purchase price, some of the decisions that you've made about where you want the interest rate to be, and so many other things. So what matters is having a planning range because since we can't hammer them down, usually until we get a lot closer to the closing table, we at least can give you a good idea of what those look like. Because the goal isn't to guess perfectly, it's not to be surprised. So the best approach is to assume that closing costs are going to exist and then plan for them as a separate line item from your down payment. So a general rule of thumb on what closing cost range are going to be is somewhere between 1% and 3% of the overall loan amount or purchase price. That's the best figure to go ahead and think about. If you're wondering why it varies so much, again, look back to state and how much the insurance cost is, things like that. Now, let's get in for a minute to the biggest reasons that people get blindsided. So, surprise one, they only save for the down payment. They did the math thinking, okay, if I put X% down, then there we go. That's my upfront cost. And then the closing costs show up and they're like, wait a minute, I needed how much more exactly? And it's why I teach people to plan with 3 money numbers: down payment, closing cost, and then whatever cushion you're looking to have after the fact for things like moving expenses and things that have nothing to do with the actual loan transaction itself, but they are important to be able to move in and have that brand new home. Because let's be so real here. Being broke after closing is one of the fastest ways to make you regret buying a house, and that shouldn't be the thing. Now, surprise two, again, they forget the move-in and the setup cost. So even if you do budget those closing costs, they're often starting expenses right after closing. Things like moving, like I just mentioned, initial repairs, basic furniture and appliances that you may need for that property. Security deposits, things like electric or water. Sometimes those things have a security deposit. You potentially also could be overlapping rent and mortgage for a month, depending on when your rent might end and where your mortgage begins. Small things can add up really fast, like curtains, tools, locks, paint, cleaning supplies, all of these kind of things. If you spend every dollar you own on a down payment and closing cost, then you're going to start out homeownership in complete stress. And let's be real, we're not doing that. Now, surprise three, you don't understand seller credits and negotiations. So let's talk about that for a minute. Here is a powerful concept. Sometimes, depending on the market, you may be able to actually negotiate for the seller to contribute towards closing cost. This isn't always possible. It does depend on the deal and how competitive things are and, how much you want to try to take off the price of the house, things like this. But many buyers don't even realize that this is a thing. So instead of thinking, I must personally pay for every dollar of closing costs, you should start thinking closing costs are part of the negotiation conversation in some deals. And I should be leveraging the real estate expert that I hired to help me figure out what that can look like. Now, let's move on from what they are to how to prepare for them. So I want to give you a simple, calm closing cost plan. So step one, you're going to separate your savings into labeled buckets. Mentally and ideally in real accounts, separate things out like the down payment, the closing costs, and a cushion emergency fund. Even if you're not saving huge amounts yet, labeling does matter because it prevents you from accidentally spending your future closing costs on something else. Step two, get an early estimate before you fall in love with a house. You do not want the first time you learn about closing costs to be when you are under contract. And if you're even thinking about buying within the next year, you should be talking to somebody like me and asking a lender for an estimate based on the rough purchase price range, your location, the likely loan type that you're going to be utilizing. You don't need perfection here. You need a ballpark. Step three, build your all-in cash needed number. This is the number that removes anxiety. It's the question, how much cash do I need to realistically get to closing day and still be okay after I've signed on the dotted line? And again, that number usually is going to include down payment, estimated closing costs, and then at least some cushion for some of the things we talked about earlier. When you know your all-in number, you stop guessing and you start becoming a lot more calm. Step four, let's decide your protection rule. This is the rule that stops you from becoming house poor on day one. It's a simple rule like, I will not use every dollar I have just to close on the house. You want to choose a minimum cushion you want to keep, even if it's a modest cushion, because repairs, surprises, they are a part of homeownership. And you're not being pessimistic here. You are just being prepared. So let's do a quick walkthrough example so this feels fairly real. Imagine that somebody is looking at homes around a certain price range. They plan on their down payment, they plan on their monthly payment, but they also plan, okay, I'm going to assume closing costs will exist and I'm going to set aside a separate amount for that. They get pre-qualified, pre-approved, they ask for an early estimate, and they learn, okay, closing costs will likely be in this range. Now, instead of feeling blindsided later, they think, great, this is a part of the plan. And when they're negotiating a deal, they can ask smarter questions like, is there any room for seller credits? Can we structure this so the upfront costs are a little bit more manageable? What would my cash to close be in this scenario? And this is what calm buyers do. They don't avoid these numbers. They look early and they plan early and they build a margin. Now, let's address the emotional part. If closing costs make you feel discouraged, here is what I want you to remember. Closing costs are not a punishment. They're just simply a cost of home ownership. And once you understand them, they stop feeling like a surprise monster and they become just another category for you to plan for. And when you plan for them early, the entire process gets a whole lot lighter. If you want this one simple action step to take this week, go ahead and do this. Write down 3 lines. My down payment goal is X. My closing cost planning range is X. My cushion rule is I want to keep at least X dollars after closing. Even if your numbers are rough right now, this gives you structure. And that structure will create confidence. So let's zoom out for a minute. Home buying is not just about being able to make another offer. It is about being able to close without panic and then live in that home without immediate financial stress. Closing costs are a part of that. They're normal. They are manageable when you go ahead and plan for them. And they do not have to be the thing that stops you from being a homeowner. Now, I'd like to hear from you. Be honest, before this video, did you think closing costs were included in the down payment? Or did you already know that they were separate? Drop a comment like, I thought closing costs were included or excluded. And if you want to make it more specific, add, the part that confuses me the most is X. I definitely read the comments and I'll reply with the clearest next step based on where you are. I'll keep breaking down the parts of this process that feel confusing so you can move forward with complete confidence. And if you'd like to see what your numbers are, please go ahead and go to pbjteam.com and book a call so we can help you figure it out.